Today with this video, we're going to start a 5-part series of how to get a mortgage in 2025 for my first time home buyers. And this first video is going to be about credit. Check it out. Hi, I'm Rhonda Burgess, and I'm a real estate broker and mortgage underwriter of 27 years here in the Nashville, Tennessee area, and my firm is Southern Living Realty Partners. All right, we're going to get down to it. Everybody wants to know about how to get a mortgage, what you need to do to get a mortgage. I've done other videos on this. This is like a refresher for 2025. So first thing we're going to start off with, number one, is your credit. Number one is just credit in general. Is your credit and their credit. So what I mean is, remember, the credit scoring model is looking at how you have paid your bills in the past. The credit scoring model is a predictor of how you will behave in the future. So if you have a history of not paying your bills, you have a history of being late, you have a history of defaulting on loans, you have a history of being a deadbeat as far as your credit is concerned, the lenders and the credit scoring model look at that and say, this person is not going to be trustworthy going forward. Okay. Again, do not pay anyone to fix your credit. You blew it up. You fix it. I see so many videos on YouTube. Y'all know I'm a big YouTuber. I watch a lot of YouTube. People saying, I paid this person or this company $2,000. They're supposed to fix my credit. They got off was some inquiries, which if you really pay attention to your credit, inquiries do not really affect your credit score that much, but I digress. You paying all this money, or you paying, $4.99 down, and you paying $99 a month for somebody to do what? To do what? You want somebody to remove your bad payment history? You did that. I mean, let's just be honest. I told y'all before I blew up my credit, I had a 485 credit score at one time. I know I did. It may have been lower than that, tell you the truth. But I blew it. That was on me. And it wasn't necessarily, and listen, the credit scoring model doesn't care what your intentions were. So let me give you an example. Like, my credit was toe up from the flow up because I was I don't want to say irresponsible. I don't think I've ever been irresponsible with my credit, but just, stuff happened. You know what I'm saying? And like, I may have been in between jobs, or I was working some low paying jobs, or something happening. I was a single parent of 2 kids. Okay. Maybe that's, there was times when things needed to, we need to use my credit. I had to use my credit, maybe to get gas or, buy some groceries or different stuff. And I didn't have the income coming in to make those payments. That's what that is. That's the reason why I had poor credit, bad credit. If you in the past did not take care of your credit, did not take care of your obligations, then yes, you will have bad or poor credit. And your credit score will reflect your previous payment history. Don't pay nobody to get it off. Why? And what really blows my mind is people who think, okay, so I paid them $2,500. I paid them $3,000. And what are they going to do? Get all that wiped off? Come on. You know what? You can, you need a job. We can all put down that, you worked at Toys R Us, you worked at Circuit City, you worked at any of these places that's not in operation anymore. You can put that on your resume all day long, but you can't tell that lie about your credit. You can't tell that lie about your credit because it follows you. Okay. So the first thing you need to do, get your credit score, get your credit report, annualcreditreport.com. I got a link on here for smart credit that I use all the time. Personally, Experian.com, TransUnion.com. You can get your credit report. So don't say that you don't know what's on your credit. If you don't know what's on your credit, then you already behind the 8 ball because you're not even doing the least bit of homework. The very least bit of homework, you're not doing it. Okay. So pull your credit. And if your credit is jacked up, then you need to start from that point and look and see what's on there. But I'm talking about if you got collections like you didn't pay, you had a, you had a JC Penney, you had a Visa, you had a MasterCard, you had a Discover, you had something, you didn't pay for it, you didn't pay it, and now it's charged off, it's a collection or whatever. You need to look at what's on your credit report, and you need to make a plan of action to get that cleaned up. You may need to reach out to somebody and say, hey, I know I owed y'all $500. Will you take $200 and take that off my credit or whatever? But you got to do that homework. Don't rely on y'all paying these people money that you could be using to pay off these debts. You could clean up your own credit yourself. If you're going to take $2,500, $3,000, $5,000, I've been seeing some outrageous numbers to pay somebody to clean up your credit. You can do that yourself. Take that money and pay that off. Goodness. But don't pay nobody to fix the credit that you messed up. You know you did it. You know you did it. So embrace it. Embrace it. Look, I was like, when I first seen I had that 485 credit score, I couldn't do nothing but laugh. I was like, wow, that is bad. That is bad. Listen, embrace it. It's you. You did it. But then you got to get a plan. You know what fixes bad credit? Good new credit. I'm going to say it again for the people in the back. What fixes bad credit? Good new credit. Good new credit. You've got to start today, and you've got to build a good credit history going forward. That's the best thing to fix bad credit. There is no magic pill. Don't go get a CPN number. Don't do all this other weird stuff that I see people talking about. And I'm like, that ain't going to work. It's not going to work, people. You've got to create new credit, new good credit to get you, and the further you get away from your old bad credit, the better. Credit score. You need a 660 or higher. Yes, I said it. Don't come at me. We're talking about, no, the guidelines say you only need a 580 credit score, so I'm just shooting for 580. I've done videos before. I done told y'all it's going to be so many hits on that 580 credit score that you ain't going to be able to afford anything. So let me give you an example. So if the base credit score, if the base credit, let's say the base interest rate is 7%, right? But you only have a 580 credit score instead of 660 I just told you to shoot for. You only have a 580 credit score, and you're gonna go somewhere and you're gonna try to get a loan. Okay, there's probably a 2% bump on the rate. That means when they're pricing that loan, when your loan originator is pricing that loan, because your credit score is so low, it's probably a 2% interest rate bump because you're high risk. You're high risk with that 580 credit score. I told y'all, I don't care what the guidelines say. We're talking about real life people. Listen, you're going to be hard pressed to find lenders who will pick up that 580 credit score. Why would I? If I've got 10 people that's got a 660 or higher score, or 640 or higher score, and then I got you with a 580. Oh no, then, okay, so you ain't done the homework. You're high risk. So it's a higher risk of you defaulting. I may not get my money back. So what am I gonna do? Honey, no, you finna pay a much higher interest rate. That's all it is to it. You finna pay a much higher interest rate. So do not shoot for a 580 and you barely getting by. Don't do that. Don't do that. Don't do that. Let's not do that. You need a 660 or higher. I know there's some programs that do a 640. Do a 660, and that's your middle score out of the three. Your middle score needs to be at least a 660. Yes, that's what I said. It needs to be a 660 because then you're going to look at more like at prime rates. But anything you're subprime if you're below that 660, and it's going to tear you out the frame. You're not going to like the interest rate. You're liable to have a tighter DTI, a tighter debt to income when you have a lower credit score. So don't tell me about, FHA guidelines say I don't have that 580, or this one say I don't have that credit score at all. What the guidelines say and what's actually going on out here in these mortgage streets is two different things. So don't do it. Don't do it. You need a 660 or higher. Me personally, I wouldn't even apply nowhere if I didn't have a 640 or higher. I wouldn't even let a mortgage person look at my credit if I don't have at least a 640 or higher. Period. But to get the best rates, you need a 660 or higher. Okay? And one more thing I want to talk about on that credit. When I'm talking about your credit and their credit. Their credit, I mean anybody else who may be going on this loan with you. You want to look at their credit too. Whether that's your spouse, your girlfriend, boyfriend, cousin, them, mom and them, your kids. Because it's several of y'all in here that's my age, okay? And you got your grown kids some type of way. Maybe y'all going in on a house together. Wonderful. I'm cool. Hey, cool with that. But let me just say something to my people that's my age, and you either co-signing for a kid or the kid or y'all going on there together or whatever. Don't get your feelings hurt because of what they doing with their credit. That ain't none of your business. And let me say that again. Whether it's your mama, your kids, you know, whatever. Don't get your feelings hurt because of what somebody else doing with their credit, because that ain't none of your business. They grown. They grown people. So you sit up there and you need to pull their credit beforehand too. If you got a co-signer, y'all joint, whatever, you need to look at their credit too. Because their DTI may be tore out the frame. Their credit score may be tore out the frame. That's just all it is to it. You in your mind thinking, oh, that's just my mama. She don't do nothing. She don't go nowhere. My daddy, he don't do nothing. Yeah, he gonna co-sign for me. Yeah, he'll go on there with me. Oh, he got good credit. I can't tell y'all how many times I have heard that. And then you look at the other person's credit and you like, girl, he couldn't buy a pack of bubble gum. Or, girl, she owe everybody in town. What is you trying to do? What? Who? This is what, because you don't know what's going on with other people's credit. You think you may know. Okay? And that's the same thing that could apply to your spouse. To your spouse, okay? You may be thinking, or your boyfriend, girlfriend, whatever y'all doing, okay? You may be thinking, oh yeah, I know his credit's straight. His credit's straight. He ain't got all this. He ain't got all that. And people be having charge-offs, repos, everything. They owe AT&T for a phone bill, an old phone bill. They got a Verizon bill from way back when. They got all kind of, Lord, I'm gonna tell y'all one time I seen this one, she said, yeah, my boyfriend gonna go on here with me. I said, oh, okay, he's straight. Yeah, he's straight. Honey, why'd that man owe $4,000 to Memphis Lights, gas and water? I don't know where it came from, what it was. That ain't none of my concern. But listen, you don't know what somebody else's credit got going on. Okay? So first thing you need to do is pull your own doggone credit. Again, don't pay nobody to fix your credit. You need to examine your credit, go through it line by line by line by line. If it's something not reporting correctly, then you reach out to the credit bureau. I'm going to have the links in the video. I'm going to have the links down there, but you need to get your credit straight. And if you got somebody that's going on there with you, you need to make sure that you see their credit and know what their credit score is. Because don't let people just say, if you are relying on this person, and I don't care who it is, if it's your parent, it's your spouse, it's whoever, you're relying on this person, you better see that credit. And don't take their word for it. Because listen, if you're at the point where you and this person have made this decision that y'all gonna enter into this, buying this property together, y'all getting a mortgage, this is a big step. Whatever it is, you better look at that credit. I want to see your credit. Don't tell me about it. Because see, you're not finna embarrass me in front of the mortgage people. That's just me. I'm not finna do that. So again, and when you're looking at that credit, make sure that you look at everything. I'm talking about you or that person that's going on there with you. Okay. Are you an authorized user on your mom and them account or somebody's account? And is that account, have they jacked up that account and that's dragging you down? This is what I'm telling you. You got to look at everything. Just because you're an authorized user, you think everything's great. The person whose credit card that is, they may have run into some financial difficulties or something. They may be too embarrassed to tell you. And then they credit that card, those counts that you're the authorized user on, they done blew them up. So your credit score is tanking. When I tell you got to look at everything, I want you to look at everything on your credit. Are you an authorized user on some accounts? You may need to be dropped as an authorized user if that account is not benefiting you anymore. Okay. Are you a cosigner for somebody else? I can't listen. I know I keep telling y'all don't co-sign for nobody, don't co-sign for nobody, don't co-sign for nobody. But did you co-sign for, a spouse? Did you co-sign for a child or whatever? How is that being reported on you? I know it ain't your account, but that may be dragging you down. That's going to have to be something that's going to have to be addressed. Does that person need to refinance that car before you can go further? This is what I'm telling y'all. It's so much. It's about your credit, but it's also about their credit. It's about anybody that's connected to you credit-wise. You co-sign for them. They co-sign for you. Is somebody's Memphis lights and gas and water in your name? Are they paying the bill? Is it a charge off? Is it what? Do you have judgments? Let's go there. Let's talk about you and that other person. Do you have judgments on your credit report? They have to be dealt with. Listen, you cannot even get a clear title to that property. You cannot get a clear title to that property if you got judgments on you, or they have judgments on them. So you relying on your sister to be on this loan with you, but your sister got judgments where she skipped out on an apartment 3 apartments ago, and it's still sitting out there. She's going to be of no use to you until she get them judgments off. This is why I'm telling you, you need to, if there's somebody that's going to be associated with you in this process, you need to see their credit. You need to see what's going on with them, and don't just take them at their word, because then again, you're going to get embarrassed in front of the mortgage people. I don't know about you. I know shame and embarrassment and everything has gone out the window because these young people these days, y'all don't care. It's cool. But I'm old. I don't like to waste people's time. I don't like to waste my time. I don't like to be embarrassed. I don't. I just don't. So I always do my homework ahead of time. Listen, when when me and my husband bought this house in 2014, this is when I first found out that my husband had co-signed for his daughter's loan that she had defaulted on years before. This is before we even got married. Okay. But again, I had to do the homework and know what it is, because see, and I'm gonna say this for my ladies, because you know how men, they think, oh yeah, that I handled that. That's been taken care of. But not when it comes to getting a new mortgage. You understand what I'm saying? So there's so many things that you need to do when we're looking at credit. You need to look at your credit from top to the bottom, from the rooter to the tutor. You need to look at everything. When you pull your credit report, it's going to have public records come first. That's where your judgments are. That's where your judgments, your IRS liens. If you owe the IRS, I'm not saying that you can't get a loan, but you're going to have to make some arrangements. There's some other things going to have to be done. But look at the public records. There's going to be judgments. There's going to be liens. There's going to be all kind of stuff up there. If you've been sued, they got a judgment against you. Maybe somebody was in a car accident and there's a judgment against them. You got to look at these people's credit. Don't take nobody's word for it. You need to be looking at their credit just as hard as you look at your credit. Okay, that's all I'm gonna say right now on credit. The links to check your credit score, and all that stuff will be in the links below. Stay tuned, because we've got 4 more parts to how to get a mortgage in 2025 for my first time home buyers. Thank you. And as always, have a blessed day.